Well, 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 ladies and gentlemen. Welcome back to Strongman Personal Finance. We got a banger of a video today because apparently the world-famous fraud, idiot, and loser, Jeremy Lefebvre, also known as Financial Education, also known as Massive Moron Clown Scammer, is launching a new workshop, and I want to encourage all of my fans to participate because nothing would make me happier than for you to sit down with a certified public accountant and an experienced financial statement auditor like the famous Jeremy Lefebvre. All that's a complete joke, of course. This guy is an absolute moron. And it really astounds me that this clown has the audacity to launch a free workshop where he's going to decode the income statement. And you know what we're going to do, ladies and gentlemen? I'm going to teach you a little bit about the income statement in this video because I'm an actual CPA. This guy is a gas station manager and a fraud. And we're going to look at Oatly, which, by the way, has been absolutely destroyed, and which he invested in, as an example of what to look out for in an income statement. So, let's read this announcement. Starting today, decoding the income statement. And it's funny because, about a year ago, he called every financial statement the balance sheets. They're called the financial statements, you freaking low IQ moron. What a loser. But now he knows how to do the income. The gas station manager understands the accrual basis of accounting, right? Yeah. Anyway, completely free workshop. Oh, he's such a great guy. He gives free workshops to poor people that just want to buy Oatly and Tattooed Chef. Open for everyone. I had to create an account, a stalker account, just to get access because I think he banned me from this group. Open for everyone who wants to be sure they have the skills to grow their stock portfolio. Yes, Jeremy, I need you to help me grow my stock portfolio. Instead of just dollar cost averaging into VT and a tax advantage account, I need to listen to you, certified public accountant, certified CPA accountant, Jeremy Lefebvre, about the income statement. Any age, experience, location. The stock market does not discriminate. Well, it does discriminate against losers like you. That's why you lost all your money. Here's a sneak peek of the topics. What's an income statement? Which metrics are important? Red flags on the income statement. Now, isn't this rich? That he went massively into companies that had the most god-awful income statements. I pulled up stockanalysis.com and I looked at his companies. Oh my God. Instantaneously, I knew they were hot trash. Practical examples. I wonder if he's going to show Tattooed Chef. And how to recognize a quality company. Now, look, just because a company's income statement looks good does not mean it's a quality company. And you can still lose money. Go look at Enphase. Go look at Tesla. They have great income statements. Well, Tesla's not so much. Their income statements are fantastic. They're highly profitable. Well, at least Enphase is improving gross margins. Tesla's margins are collapsing. But just because you have good income statement does not mean that you're going to make money on the stock. The only thing that's useful for is to help you identify a very risky, unprofitable company. That's about it. So apparently we can reserve our spot today. And here's his little brochure, Decoding the Income Statement. And I got somewhere he can shove that. So let's go ahead and look at an example of an income statement. So this is Oatly Group. This stock is down 48% in the last month. Year to date, it's down 74%. And over the past year, it's down 78%. Oh, by the way, this is one of Jeremy's big-time stocks because he's so good at reading the income statement. So what is an income statement? Very simply, it is the profit and loss of a company over a period of time. On stockanalysis.com, you can look at annual income statements. This is for 4 quarters or a year. Or you can look at quarterly income statements, which is every 3 months. Or trailing, which is the prior 4 quarters. Let's look at the quarterly income statement. Let's go line by line. First, we have revenue. What is revenue? It's sales of a company. For a company like Oatly, they make oat milk, which, by the way, is a very competitive market. There's like 1,000 different brands. They make oat milk. When they deliver that oat milk, the sales price, they record that as revenue. Once it is delivered to the customer, that is when they record revenue. It isn't when they make the milk. It isn't when they ship the milk. It's when control passes to the person that purchased it. That is when they recognize revenue on the income statement. This is not cash. okay? When you sell something, just in accounting, just because you haven't been paid cash does not mean that you can't record revenue. Once you deliver the item, you record revenue. If you get paid now or get paid later, that's irrelevant. The income statement is based on the accrual basis of accounting, when revenue is recognized when it's earned and expenses are recognized when they are incurred, not when the cash is received or paid. Next, we have cost of revenue. What is cost of revenue? Very simply, it's the cost to make the oat milk. Generally, it's labor, raw materials, and factory overhead that is allocated to the product. So on an income statement, the cost of making the milk itself, the soy milk, the soy boy milk, first sits on the balance sheet as inventory, and then when it is sold, it is matched to the revenue that is generated by the sale, and it is then expensed on the income statement as cost of goods sold or cost of revenue. Gross profit is simply the revenue minus the cost of revenue. You sell the oat milk. You recognize the revenue, you recognize the expense. Doesn't matter if the cash is paid or if the cash is received. It's when the sale happens. That is your gross profit, is revenue minus cost of revenue. This is your profit excluding all the other types of expenses, because a company's expenses is not just making the soy milk. Okay, you got selling expenses, you got the marketing team, you got the accountants, you got all sorts of costs that come with a company that are not associated with the milk itself. Okay, below gross profit, you subtract out selling, general, and administrative expenses, like I just talked about, R&D, and other expenses that are not directly attributable to producing the milk. You take your gross profit, you subtract all of your operating expenses, and then you get your operating income. Now, here's a red flag, ladies and gentlemen. I don't know if Jeremy noticed this, but there's a negative number under operating income. What does that mean? That means this company, from its core financials, from its core business, is losing money, massive sums of money. They lost $75 million on $195 million of revenue, $196 million of revenue in 3 months. Okay, that's a huge loss. That's almost 50%. 40%. It's horrible. Then, below operating income, that's not a red flag. Have they ever been profitable? Let's see. What if Jeremy saw this red flag? Oh, all I see is negative. But he's such a master of the income statement. Man, I'm gonna make him an honorary CPA. Next, we have interest and taxes. After you subtract your cost of goods sold and you subtract your operating expenses, then you subtract interest and taxes. And that is when you get net income. So first you take interest, you subtract your interest. This is your pre-tax income. Then you subtract out taxes, or if you have a tax benefit, you would add it back, which looks like what Oatly had here. And then you have net income, which is your bottom line loss. So in accounting, your net income is your profit after all expenses are deducted, including interest and taxes. It's all about when events occur, not when cash is paid or received, okay? That's the basics of the income statement. You want to look at revenue, you want to look at gross profit, you want to look at operating income, and it's bolded for you right here in stock analysis, pre-tax income and net income. And if you see a bunch of negative numbers, that's probably a red flag, okay? And you can calculate all sorts of margins. For example, your gross margin is simply your profit, the percentage profit just from selling the milk. So basically, every time they sell milk, without any other expenses subtracted, they make 19.21%. That's here. That's right here. To calculate gross margin, you take your revenue, you subtract your cost of goods sold, which gives you gross profit, and then you take your gross profit and you divide it by your revenue. That's your gross margin. To find your operating margin, which is negative 38%. That's so good. You take your operating income, which is negative, oh, that's not a red flag, and you divide it by your revenue. To find your profit margin, you take your profit, your net income, divided by your revenue. That's it. That's the income statement, okay? If you don't understand those basics, like Jeremy doesn't, because I guess you can't see negative. I guess they just vanish then you shouldn't be buying individual stock. You need to at least understand the basics of what you're looking at before you screw around with this stuff, okay? This guy is a moron. But you know what? I invite you all, please attend it. Please learn how to decode the income statement. I'm sure you will learn so much from the fraud loser, Jeremy Lafave. And with that being said, have a wonderful night.